I'm Reefa, Head of Events at WiredSussex. Welcome to this breakfast session on finance for freelancers. And I'm delighted to be joined by our sponsors, Plus Accounting, today to answer all your questions on everything to do with freelancers. A warm welcome to Mark Horsfield. Tell us a bit about Plus Accounting.
Yeah, thanks, Reefa. I'm from Plus Accounting. I'm a manager on the business services team here. We are accountants based in Preston Park. We're general practitioners, so we deal with all of our companies' compliance work, so statutory accounts, corporation tax returns, personal tax returns, those sorts of things, as well as also specialising in certain areas, especially around Brighton areas, quite a lot of video games clients and other technology clients, as well as franchisees, GP surgeries, those sorts of things there. So, yeah, we provide compliance work as well as sort of general business advice for our clients, both either as a sole trader or as a limited company. So that's really what we do.
Brilliant. One of the things that I think people get really confused about when they're trying to start up their own business is the different kinds of entities, or what they should do, or what they should set up. Like, should they be a limited company or should they be a sole trader? And I think they just don't even know what the options are. Can you help us understand a bit more about that?
Absolutely, yeah. It is quite, especially when you're just starting out brand new in your business. It is difficult to know what you should be doing and which route you should be taking. So there's a couple of options for you when you first start out. There's a self-employed route, so that's what would be known as a sole trader, or if you have a business partner, you could be in a partnership. So this method is the more simpler method. You essentially sign up to HMRC as being self-employed, and you receive a UTR, and then you have to file a tax return every year. So a tax return runs to the 5th of April, and you need to file those by 31st of January. And I say it's the simplest method because all you need to do in the sole trader self-employed method is to record your income and expenses, work out your profit or your loss, and then calculate the taxes based on that. So that's all you really need to do in sort of the sole trader self-employed method. The alternative is to go sort of incorporate a company, which means you set up a company with Companies House. So you would essentially be a director shareholder of that company. You still likely would have a tax return to prepare, and you also have sort of compliance work to do for your company. So you would have statutory accounts, which need to be filed every year. You have a corporation tax return. You have a confirmation statement. There's also certain different reporting requirements with a limited company, and it's more done to what it really is. It's a separate legal entity, so there's a distinction between you and your business, whereas as on a sole trader, you and the business are essentially the same. There's no real legal difference, and that might be one of the considerations of what you might consider which route you go is sort of your liability impacts. If you run up debts under a sole tradership, your personal asset might be liable to sort of settle the debts, whereas limited company, you sort of lock off the assets of the company there. So I think whichever method you go with, there's sort of no right or wrong answer. It's sort of a unique case of what works best for you. Say self-employed is the simpler option. It's more cost effective. A limited company is more costly, and there's more admin compliance work, but it can have sort of tax benefits later on. So yeah, it really depends on your own personal circumstance, but it's there's nothing wrong with potentially switching later on.
So really, when you're starting out with the self-employed route, or the sole trader route, you still have to do a bit of work yourself. You still have to keep your own accounts. You still have to keep your own expenses, but essentially that money can go into your own personal bank account.
Yeah.
And then with the limited company, you are maybe more protected because you're keeping that. You might have a business account and then have that entity, like that limited company, is totally separate from your personal stuff. So it could be beneficial to you in that sense as well.
Yeah, absolutely. So limited company, you do have to use, obviously is a separate entity, as I said. So you do have to have a separate bank account. You have anything you purchase under the company belongs to that company. It's not, even though it might just be you running it, often there's confusion over well, I'm doing the work, so it's my money. Essentially, it's the company's money because it's separate. You could sell that company yourself and not have anything to do with it. But if you buy a car, it's going to be under the company name. Whereas if you buy a car personally, it's under your name. So it sort of separates the assets out. And there's different effects on how you take that money out. So if the company earns the money, it keeps the money in the reserves there. And then if you need to take it out, you then have to declare it yourself as income, either by salary or dividends. So yeah, there's other things, sort of like insurance arrangements. You have to make sure it's in the limited company name. When you invoice out, it has to be in the limited company name. There has to be sort of a separation there between you and the company.
Yeah, definitely. I understand. So, and that's why it's good to have an accountant when you become a limited company, because it's a lot more complicated. Yeah.
Yeah, absolutely. It's as a self-employed sole trader one, you can do it yourself. You can get an accountant to help you. Generally, the fees for preparing a tax return are a lot lower than it would be for preparing statutory accounts. As I say, submitting statutory accounts, you have to do it under a certain regime. So there's a certain format, certain disclosures you need to put into a statutory accounts, which unless you do have some knowledge of accounting, it's probably not worthwhile. I have seen cases where people have filed themselves. It's not always doesn't always go well when they try and do it themselves. So it is often the case you do need an accountant to prepare accounts and corporation tax returns. But there's nothing to be worried about when sort of dealing with the accountants in that regard. We do try and make it clear for you, and it's always best when you get presented with accounts is just to ask questions about the figures in there and what goes in there, rather than just saying, well, my accountant prepared it, so it's fine. It's worth always, discussing it with your accountant to understand what's going through and what's going in there.
Yeah, I think that the worry, I think, for a lot of people is if they're going to do it wrong, whether they're a sole trader and trying to do their tax return themselves, or they're getting an accountant to do it. Are they going to do something wrong? I was thinking about that, like when people start their own business, they often do it when they've got a full-time job. So
Yeah.
they've got that security. What happens then if you're paying tax in your full-time job and then you've started a freelance thing on the side?
Yeah, so it really depends on the level of income you're making from the sort of side project or side work you're doing. So there is a trading allowance of £1,000. So and still until you reach the point where you take over £1,000 from that other income, you don't have to declare it. So if you only do a couple of jobs a year and it's a few £100s or something like that, then you can just keep that money and you don't have to declare it anywhere. If you then start earning, start doing more work and go over £1,000 in a tax year, so between 6th of April and 5th of April, you then have to declare that income because it's essentially untaxed income you've earned. So your employment income goes through the payroll, you pay taxes and national insurance through the system there. When you're earning sort of money from this sort of self-employed trades, the revenue don't know about it unless you declare it. And penalties for not declaring it can be quite severe. So you're obviously obligated to declare that money if you've earned it. You then obviously have to register for self-assessment. And the way it will work when you have employment income as well as self-employed income, your tax return, you have to declare your total income. So you would have your employment income of X amount and your self-employed profits of X amount. You tally that up to a total. You pay your taxes based on the total income. You wouldn't pay tax twice because you've already been taxed on your employment income. So that acts like a credit on your account. So you would only sort of pay the difference in the actual profits made, but you still have to sort of declare it on the tax return. That's how it would work if you're doing employment as well as a trade on the side as well.
And then that can sometimes, the HMRC are pretty good at like working that all out for you. And then you might get at the end of the tax year a rebate because you might have paid tax in two different
Absolutely,
states.
yeah. It often depends on sort of how much tax you've had deducted from your employment income and what your tax code was. But yeah, there is a system. HMRC do have their own online system for filing the statutory tax return. So you can just literally enter in the boxes enter the figures into a box, and then it should calculate it for you. So it then, yeah, if you do have a refund or you have payments on account, then you can see what it comes out with at the end, and so you usually get it processed automatically after that.
I think that sometimes people are a bit worried about all of this stuff because they just don't know enough, and they don't know the questions to ask. And it's because probably we don't even we worry about asking for money. We're not told like how to do this at school. We don't know how to
Yeah,
even invoice sometimes, you know. And younger people that I've worked with who are just starting out as a freelancer, they worry about like what to even put on an invoice. But can you change your business entity at any point? Like, so you'll start off as a sole trader and then become a limited company or back again?
yeah, absolutely you can. I mean, it's quite common, especially early on, especially if you're new to the business, you're not sure how it's going to go. You might go with the sole trader, self-employed route because it's the easier format. You're not sure what levels of income you're going to be getting, so you try it out as self-employed, see how it goes. If you find that, or even if you're on the basis where you've got employment and you're doing it as a side hustle as well, but then you find that this business is picking up, you commit to it full time, and then you'll start earning profits. There's no sort of set amount where it's sort of tax efficient to be trading on a limited company to a sole trader, but I would estimate sort of the region of, if you're making 30 to 40,000 pounds per year in profits, tax wise, it's probably efficient to be doing it under limited company. So if you're reaching that point and you're operating as a sole trader and you want to switch, it's quite easy to do. All you just have to do is register a company with Companies House and essentially change your invoices. Rather than invoicing under your personal name, you then invoice under a company name, and you provide your company bank details rather than your personal account details if you're operating under a personal account. Um, there might be odd complication if you've got certain assets in your personal which you want to then bring into the company. You sort of then have to sell the asset to the company. There are a few little bits, but nothing to be overly concerned about. Sort of switching, so it's easy to do, and vice versa. It's easy to do to sort of close the company down and then go to a sole trader, self-employed structure. It really depends upon the reason you might do that is if you have been trading under a limited company, but you find that you're sort of declining trade or you're doing it only on a part-time basis now, and it's not worthwhile having a limited company for the cost extra you have. So all you have to do is to striking off the company. So you would file a DSO1 form with Companies House, which essentially closes down the company. The only odd, and then once you've done that, you then register as self-employed with HMRC. The only sort of slight complication is if there's any sort of assets or reserves left in the company that you need to take out. That's when you might need to speak to an accountant about what the tax implications are of doing that. But again, it's not too troublesome to get that advice, so it shouldn't put you off if you want to do that.
Yeah, I see. I mean, and it's basically once you've made that shift in your head, like which route you want to take, like being a limited company, being a sole trader, or back again, then you can once those things are in place, like the business account, the way that you're tracking your expenses, the way that you're finding an accountant who can answer these questions. That once that's done, then you're laughing, aren't you? You're sort of like you're up and running, and then you never have to think about it until the next tax year.
Yeah, these sorts of problems, they're not sort of long drawn out problems, really. They're sort of, an hour, half-hour conversations with the accountant saying like, I want to do this. Okay, this is what's going to happen. And then you can sort of establish the actions you need. And it's not sort of, it doesn't take months and months to sort out. They're all quite quick processes, either changing structure or setting up one particular structure. It's quite quick to sort out. So you shouldn't dread the sort of administrative task of it. It's quite a quick process to deal with.
Yeah, exactly. So what about VAT? Can you explain a bit about what you need to think about around VAT or being VAT registered, or what that even means for some of us?
Yeah, so VAT, it's a tax on your suppliers essentially. The current rate is 20%. So any business which has taxable supplies of £85,000 over a 12-month period are obligated to register for VAT. So essentially, if you're selling something for £100 and you then have to charge VAT, you're then adding the extra 20%, so you're then charging £120. So that's essentially what it will work. You then have to file VAT returns. They can often will be quarterly, so quarterly returns. So again, it's an extra administrative task being VAT registered. So you would, charge VAT on your sales within the UK, so either goods or services, and then also be able to then reclaim VAT, any VAT you incur on your costs as well. So you then sort of tally up the amount of VAT you've charged your customers and the amount of VAT you've reclaimed from your suppliers, work out the difference, and either pay across if you've got an amount to pay to HMRC, or you can reclaim that if you've reclaimed more than what you've charged. So that's essentially what it is. In terms of, say, if you're sort of selling mainly to businesses who are VAT registered, obviously, if you're sort of, you can voluntarily register. So what I'm trying to get at is you don't have to wait to the £85,000 threshold to register VAT if you don't want to. The idea behind that is it might be of benefit to register for VAT if you incur a lot of VAT on your suppliers.
Right.
So if you're charging businesses who are VAT registered, they're able to reclaim the VAT. So it makes no difference from their point of view if you're charging £100 or £120, because that £100 is their cost already. They're able to reclaim that £20. So it makes no difference to them. And then you're actually able to save money on your costs, and you get sort of a tax saving there. If you're actually invoicing, if your customers are individuals or anyone who can't reclaim the VAT, obviously that extra VAT charge is an extra cost to them. So that's the consideration, is how it affects your place in the marketplace in terms of your competitive pricing. If you then have to charge an extra 20% to those clients, does it then not become attractive to them to buy from you or to get you to supply them with services? So the consideration is if you are charging sort of individuals, people who can't reclaim the VAT, I would say it's best to stay off VAT registration as long as possible. If you are invoicing mainly businesses who are able to reclaim, then it might be beneficial to be VAT registered, even if you're not over the VAT threshold, because you'll be able to reclaim some costs there. Also, is if there are anyone who invoices businesses outside of the UK, you don't have to charge VAT on those sales, but you're still able to reclaim VAT on your suppliers. So that's another reason why you might want to do it as well, because even if you don't charge VAT but able to reclaim it, you obviously save money there. So that's quite a lot of the considerations with VAT.
Yeah, brilliant. I mean, to get to a point where you're earning like 80, 85k, that's when your accountant will probably start saying to you, you need to be VAT registered.
Yeah, it's a tricky one, because a lot of the time you might just be, obviously you don't get the accountant's figures until the year end, or you don't do your tax returns to the year end, so you might not track your income levels as a total throughout the year. So you have to remember it's a rolling 12 months. So you don't want to have to you might prepare your tax return well after your year end has passed. So you might be looking at backdated information, especially. So, and if your turnover has gone close to the threshold, you need to be tracking it on a sort of monthly basis to make sure you don't go, if you do go over, you only have a month to register for VAT. So you have to, if you are sort of around the 50, 60 mark and you're thinking your turnover is increasing still, it's worth then tracking it on a monthly basis to make sure you don't go over VAT threshold. Because again, there might be penalties if you don't register in time with HMRC.
Yeah, I understand. And then it might be that there's some people that are like a little bit over that threshold, and they're thinking this isn't good for me.
Yeah, it's an annoying one. If you get close to it, so people often turn down businesses to make sure they don't go over the threshold.
Wow.
If it's a case of you go over it just by one-off invoice, so if you normally have a turnover around 50, 60k, but you have a one-off job, which is, massive value, it's 50, 60,000 pounds for this one job in a short space of time, you can actually apply to HMRC to advise them that you're not registering for VAT because you've got a one-off job, which is not going to happen going forward.
Mm-hmm.
So you can get sort of dispensation from registering if it's just a one-off job that's pushed you over the threshold. And there, so don't feel like just because you've gone over, you have to then register. If you've got a valid reason why for 1 year you've gone if you had a much higher turnover than usual. So if you do have to register, but then down the line your turnover does decrease, if you're so goes back to below the VAT threshold, you can then deregister. So it's worth remembering that.
Yeah, and I think that as well, one of the other things about limited companies, just to go back to that, and with the suppliers if your clients are big entities like, a big corporate, they prefer often you to be a limited company and be VAT registered and have everything in place, so it's better for them. So it all kind of depends, doesn't it, as you grow your business.
Yeah, it's not uncommon for it to be sort of enforced on you. Say a lot of big multinational companies often prefer dealing with limited companies rather than sole traders. It's possibly a reputation thing, really. So you might be forced to do that, and if you are, then you sort of go along with it because it's in the contract and it's worthwhile for you. But it is quite common. You'd be surprised how often it happens.
Yeah. Can you explain a bit about the implications of RI 35 to consider as a freelancer, and also explain that to us a little bit?
Yeah, so IR35 is something which has been around for a few years now. What essentially is, it started out in the public sector organisations. There was a news articles, a lot about newsreaders, Lorraine Kelly, those sorts of people who got caught by this legislation. So what it actually means is often people would be sort of contracting or invoicing a client through their limited company or as a sole trader, when actually their working arrangement was very much like an employee. So what the government and what HMRC were trying to bridge was to sort of claim taxes as if they were an employee. So that often, when you're an employee, your employer pays class 1 national insurance, you have your national insurance contributions to make, and you have income tax to pay. When you do it via a limited company, there's no national insurance implications. You just invoice a total and they pay the invoice. But often in the working situation, they would have a work email address. They would work their clients' working hours. They go to the office. They'd have control over their work. They tell them what to do, and those sorts of things there. Where looking at the outside, it looks like they're an employee, but they're actually using a tool to sort of try and save taxes that side. So this legislation was brought in to sort of stop those arrangements where they're using a personal service company to invoice. So it was started out with the public sector. It's now been brought into private sector organisations, so it's medium and large size businesses. So if you contract with a company, your client is obligated to consider your sort of your status, really is your employment status, and they need to consider, I say, all sorts of arrangements such as level of control, substitution, actual working hours, and those sorts of things there. And if they deem that you're within IR35, they're obligated to deduct tax as if you were an employee. So if you do fall under that legislation, it's not really worthwhile having a limited company anymore because you're not getting any tax benefits for it. And it's often the case of where you're working for one client. You don't have a business to business probably has many different clients, and that in those arrangements, it's quite clear that you've got your own business. You're working for several different people. You're in charge of your own work. They're using you for your expertise, your specialism. But if you're just working for one client and they're bringing you in, they're telling you what work to do, how to do it, that sort of indicates that it's sort of IR35 might apply. And if they are a larger business in a private sector or of the public sector, IR35 might apply. And if it does, it will then have taxes deducted from your invoices. So you get a net, so your income tax rates and national insurance contributions get deducted. So it's sort of, a lot of contractors were using the setup before, but when IR35 came, a lot of people had to cancel their limited company because they fell under this legislation. So it's quite costly if you fall under it.
Yeah, and in some ways, it's like protecting the contractor as well, because they're not getting any benefits from working like that. But as in, if they are an employee,
yes,
they are acting like an employee.
Yeah, it's a strange one because a lot of the times I've known several people who, when they started working for some large businesses in London, they would instruct them to say, "I want you to set up a limited company." It wasn't their choice really. They told them to go set up as a limited company to get around paying them national insurance, wage, and all those sorts of things. And then when the legislation came, they actually we're now not taking on contractors because we're not allowed to, or they're all falling it.
Yeah.
And it was those arrangements is why they brought the legislation in place, because there should be an employee, but they told them to register as a limited company, not for their own choice. It's because their client told them to.
Mm.
And in that case, it's yeah, you don't really have a say in it when if you're the contractor now. The responsibility lies with your client to determine your status. So if you think it's wrong and you think you are a genuine business and it's a business to business supply, you can challenge their determination. If they say we think IR35 applies and then start deducting your tax from your invoices and you disagree with that, there is a way to challenge it, but you sort of have to take it up with your client. HMRC have sort of distanced themselves from these determinations. They're sort of leaving it in the hands of the public sector, of the large businesses to determine the status of their contract. And you don't really get much say. So if it does apply, to either try to challenge it or you just have to stick with it and really not take on the limited company if it, because it really won't be worthwhile for you anymore.
Yeah, exactly. I mean, the whole point of setting up a limited company or becoming a freelance sole trader is to have that flexibility, work for yourself, you work your own hours. So I think there's even a kind of little quiz, isn't there, on the HMRC website that helps you
Yeah.
work out whether or not you are technically an employee.
Yeah, it's a tricky one because there's a lot of different factors they take into account, and no one factor outweighs the other really. You know, and often the case of you can having contracts in place, but you have to look at the actual working environments. One was like a substitution clause where if you're not allowed to bring in someone else to do your work, that's an indication that you sort of IR35 applies. Because if you're a business, you contract with that business, so your client has no say over really who does the work. If you've got employees, you would allocate an employee to do certain works how you see fit. But if your client says, actually, I want it to be you and no one else, you can't bring any other contractor to do the work whatsoever. That sort of suggests that IR35 applies. There, as you said, there is a tool online you can take. I found it's not the most helpful in terms of helping you determine your status. Really, what you should get if you are in that situation, you should get a compliance letter sent to you to tell you what their determination is, and then have options of what to do once you know your status.
Yeah. Okay. Well, that's really good to know for like if you're a long-term contractor at an organization, it's worth after about 18 months, is it, to sort of like work, like
Yeah,
really think about it.
yeah.
Brilliant. And also I've got a couple like a sort of I know we're running out of time now, but like practical things like should you record all your finances and expenses and income and systems like Zero from the outset or
Yeah, it's an
anything
interesting one. To keep it simpler, you can just use an Excel spreadsheet, especially if you're a sole trader. The cheaper option is to just maintain an Excel spreadsheet, have a list of your income and expenses. You still need to keep records of your expenses you make. So you still need to retain a receipt somewhere, even if it's a digital copy or it's a physical receipt. You still need to keep records for 5, 6 years. So you still need to retain certain receipts, but you can save money by doing it in your own sort of method of Excel spreadsheet or even paperwork, but paperwork's dying out a bit, so it's best to keep it on an online system. Or you can use an account system like Zero. Say they are subscription costs. They cost in the region between £20 to £30 per month plus VAT. So you're talking £300 to £400 per year. So that's the cost you're looking at if you wanted to keep it. The advantage of it is you get more up-to-date information. So you maintain the records there. It helps with sort of financial planning and those sorts of things. And it's also, it keeps all your records in one place. You can attach receipts to the actual expense payment when you reconcile it. So it's a more sophisticated tool to use. and it makes life a bit easier for you rather than scrambling around trying to find certain receipts. If you've got an accountant, they're saying, what's this one? If it's already attached on your online system, then it does say it is a bit of a time saver. It just takes a bit of getting used to, but you can get training on Xero and things like that to use it. So if you've got sort of spare money available and want to have better, more sophisticated method to track your finances, then using a Xero or Sage or whatever can be quite useful.
Brilliant. I really like talking about money and finance, and I think that it's especially when it's your own business, people can get really caught up in like the worry about like doing it right, and like keeping a spreadsheet, keeping the sales like coming in, like keeping the like income coming in, and keeping a record of like where the money's going out. It's
Yeah,
just,
I mean, it's part of it's sort of credit control. When you've got your income there, you want to make sure you've been paid. I mean, Xero is quite good. Obviously, you can see which your invoices are outstanding. If you maintain it on an Excel spreadsheet, you sort of need to mark it as paid yourself. So it's how good you are at those sort of admin tasks, really, isn't it?
yeah, exactly. And I think with the apps, it becomes a kind of game. It's like you can actually like, log that receipt straight away, and
Yeah,
where you
you
are.
can get apps like it's now called Dext. It was called Receipt Bank, where you just you take a picture of it. You see adverts scanning that all the time, and it then links the receipt directly to the expense on your system. So it's very sophisticated now, these methods. I mean, if you can afford it, they are quite useful to have.
Brilliant. So I think, unless there are any other questions, we could probably wrap up. But thank you so much to Mark Horsfield for taking the time. Thank you so much to Plus Accounting for sponsoring these events. We have got a whole bunch more of events the rest of the year, are all lined up on our website, wiredsussex.com/events. So thank you so much. I hope to see you all again soon.